Does Warren Buffett still believe in stocks? Are tech stocks finally cheap? And could big government spending in Canada fuel the Canadian stock market? Those are this week's market moves. Let's dive in. All right, let's start with the legendary investor Warren Buffett, who met with the Berkshire Hathaway faithful in Omaha, Nebraska over the weekend at Berkshire's annual investor meeting. And the big news, Buffett announcing he'll be exiting as CEO later this year. The big number is how much cash Berkshire is now sitting on, nearly $350 billion. And that's got a lot of people wondering if Berkshire is shying away from stocks. But remember that Buffett, who's almost 95 years old, said in the Berkshire shareholder letter earlier this year that the lion's share of Berkshire's money remains in equities and there are no plans to change that path. By the way, what are Berkshire's top stock holdings? Well, number one is Apple. They sold some stock last year. American Express, Coca-Cola, Bank of America, and Chevron. Okay, now, while Berkshire owns Apple, Warren Buffett's never been really known as a tech investor. Tech investors this year aren't so sure if they want to stick with that sector. We've seen so much volatility. It started with worries over how much AI spending we might see, and more recently with trade worries. So, are these stocks now considered cheap? Well, according to a new report from Bloomberg Intelligence, most of these tech stocks are still trading at a premium to their 5-year average. However, if they are on pace to double their sales compared to the broader S&P 500, and that is the consensus call amongst the analysts who cover these companies, this is no longer the most expensive sector amongst the S&P 500 stocks. However, Bloomberg notes if you're looking for some better deals, that healthcare and discretionary stocks, as an example, are trading at discounts to their 5-year average. And finally, in the political arena, there's a lot of focus on Canadian Prime Minister Mark Carney's high-profile meeting in Washington with Donald Trump. But at home, there's a lot of buzz around how much spending we're going to see from Carney to help stimulate the economy. Interestingly, Canada running deeper deficits has historically been a helper for Canadian stock market performance. According to a new Bloomberg report, since 1970, there have been 14 years where we've seen the federal government add more than 0.5% of GDP in net new spending. The average TSX return in those years was 14%, compared to around 5% in other years when you exclude 2008 and 2009. Meanwhile, the Liberal government may focus on boosting infrastructure spending, and Bloomberg notes that when we've seen that trend in the past, it is typically correlated with higher earnings growth for TSX companies. All right, those are our market moves for this week. Thanks for watching. What market moves are you watching? Let us know in the comments. And don't forget to subscribe so you don't miss our next market moves. See you next time.